Time for Hotspot Metals, the spot for precious metals news, views, education, and research.
All right, everybody. Chris here with Hotspot Metals in Chicago, back after a 2-week hiatus. Hope you didn't mind. I took a little break. There was a lot of crazy stuff going on in the gold and silver market, right? Well, my time was spent working on my real job, which I'm fortunate to have one of those, and just very busy. Didn't lose a step on the precious metals market. Been watching every day. Been doing my scheduled purchases. And when was it? I guess it was early May. I was on May 3rd. So I get paid a couple times a month to take my extra money. Anything I don't have to spend. I guess I could say I buy precious metals, but I actually just convert fiat to precious metals. And I do it as a regular, steady thing, market up, market down. Sometimes that works out well in the short term. Sometimes it works out poorly in the short term. And I don't look at it that way anyway, because I'm not selling. I'm not trading metals. So my viewpoint is a lot further out than a lot of people. I don't mind saying, because I'm in good health and I'm proud of the way I feel and look at my age, at age 62. It's important for you to know that, because everybody's situation is different. I'm 62. I do not see any other alternatives to where to invest right now personally for myself. And that's where the title TINA comes from. TINA stands for There Is No Alternative. TINA. Okay? And there's a lot of things that I look at as TINAA. That's TINA with two A's. That stands for That Is Not an Alternative. So what is not an alternative for me right now for investing or places to put my fiat? Well, in fiat, for one, let's start with cash. Cash is a bad place for my money. I keep a reserve in there that's pay my normal bills that have to come and go, car insurance, rent, things like that I pay on a regular basis, my subscription to Netflix, etc. So I keep a base balance in there, but anything beyond that, I convert to either gold or silver, whichever way I am moved based upon what's happening in the market. So silver taking such a big dive here, with the gold silver ratio being so high, I am going heavier silver than I am gold right now. It's as simple as that. Okay. Silver picks up, gold silver ratio comes down a little bit. Then I might have another decision next pay period and say, well, okay, now I think that the opportunity is better for gold. Gold may be sitting on the chart, or silver may be sitting on the chart on at the bottom of one of these oscillations, and I'll say, okay, I'm gonna. This is a good time to go with silver. And then there's times, and this is going to happen, where you're going to buy gold or silver, and they're both going to go down. This last week would be a good example of a time, no matter what you bought, you're screwed. It's going down. You can try to time it if you want. All I do is I look for dips and I buy on the dips. I know I'm stealing that from stock traders who, BFTD, buy the frickin' dip or whatever that stands for. Well, I try to do that in precious metals, but you know what? It doesn't matter because I'm not selling. I'm not a metals trader. At some point, my goal is to set up an online store to trade some of the collectible stuff that I have here. The bullion is going to be sold to a bullion dealer. It's not really going to be sold online. But the collectible stuff, I see some fun there to be had. I've made some good buys. Some of those things really have held up really well in spite of spot price. And I've done a video about how you can forget about spot price in a lot of cases with collectibles. But let's get back to Tina. Okay, so cash is not an option. It's not an alternative. TINAA. This is not an alternative, not for Chris. Because my bank, I don't know about yours, I'm with a big bank. Everybody's heard of Chase. It's like 0.5% interest against the backdrop of about what I would consider to be probably 3% inflation out there, as best I can calculate. I don't have the time to go around and calculate everything, but I sure can tell you this. I go to the grocery store and I got about 5 items in my grocery bag and I'm spending $60. A pound of ground beef, and I'm a meat eater. A pound of ground beef is costing me like $6, $7, $8. There's inflation. And we could spend way too much time talking about how inflation's measured differently than it was back in the 80s and 90s, and how they exclude things that actually do affect your life. There's a whole lot of malarkey being pushed out there by the financial press. And who's listening? I really don't know. I think the market's driven by algorithms, not by investors saying, I really, that University of Michigan confidence is up. Margaret, let's pull that money out of the mattress. Let's go call Fidelity. Let's get back in the market now. This is not the way things work. The algorithms are running everything. They see a twitch over here or a twitch over there. Worse yet, some of these tweets that affect the whole world these days. But if I'm talking about tweets, I'm on from cash where I lose money against the inflation rate. But since I mentioned tweets, let's talk about the stock market. This is where majority of people have their money. I have some too. I work for a company. I have a 401k. It's a great place to put some excess reserves. Try to put enough in there so I get the employer match and all that kind of good stuff. But man, am I lucky to even have a program like that. And everybody can allocate money in their 401k the way they want. I'm an old guy. Been through 2 big dips, the .com dip, the real estate crash of 2008 then, 8 years later. I cannot take another one. So I play it very conservative in my 401k, and my personal allocation is toward very conservative options in there. And there aren't many. The most conservative option in most 401ks would be almost what they call risk-free cash, but it would be the short-term bonds. So I'm very heavy on the short-term bonds. Every once in a while, I'll put a percentage of my 401k into certain emerging markets. But right now, I really just want it to hold its value. I want to contribute enough to get my employer match, and that's that. I'm really not counting on that being a wealth builder, not at historic market highs. We're 8, 9, 10 years into a long-running bull market. It's a very, not only is it high, I'm having a hard time understanding why it's so high. Now, could it blast higher and do much better? Certainly it could. Certainly it could. But what's of value to me? To protect my savings or to participate in a hot as a pistol market? I sleep better keeping that part of my paper savings in extremely conservative things. So not all my money goes into 401k. What does goes into short-term bonds. We're talking about TINA. There is no alternative. We're talking about TINA in terms of your extra money, your discretionary savings. And if you don't have discretionary savings, or you claim you don't have discretionary savings, I would say you're probably wrong, because you're just one pizza away from having an ounce of silver. Everybody's just one Domino's pizza away from having an ounce of silver. And even if all you're doing is buying 1 ounce of silver, or putting that money aside to buy 20 ounces of silver after a few months, you still should have a regular savings program, which people used to always have some allocation in precious metals, gold or silver, out of their entire savings. Now, people have been tricked out of that. They've been told how horrible of an investment it is, when in actuality, if you were to zoom out on this gold chart and you go back to the year 2000, I won't bother you with all that now because there's 100 other people that can show you that gold purchased in 2000 would actually would beat the S&P or the Dow index. Oh, I hear rain outside. You would be ahead having saved in gold and silver versus having your money in the market. And we're just one tweet, one war declaration, one big rate hike, one black swan, they call them, away from big swooping drops in these markets. And they look like they're at the top. They're acting like they're at the top. I can't risk it. Maybe you can. You want to risk it? And you're young. This is the big thing. If you're a lot younger than I am, you can risk it. You can take a few hits and still bounce back. I did it. I got wiped out a couple times and came back, but I can't do it again. And a lot of the arguments for being in the stock market look over these long periods of time. Well, if you had bought, IBM back in the 60s and had just bought and hold, today, you'd have millions of dollars in the bank. Well, guess what? People don't get the discretionary money to actually start saving in big quantities until they're in their 30s. And you're only in your 30s for a while, and then you're in your 40s, and you're sending kids through college, and then you're in your 50s and 60s, and now you're starting to think about retirement. So all these arguments about buy and hold forever and all that, guess what? You don't live that long. You have this window. And if during your particular wealth building or affluent years, if you don't have, if you weren't lucky enough to pick the right things, lucky and smart to pick the right things, or the market wasn't in a raging bull market with cheap money being printed and the market being pumped every day, if you weren't in that window, then that is not an option. That is not an alternative. TINAA. That is not an alternative for you. You need to find other ways to build wealth, like starting a business, investing in your education. All these things are very age related. So that's why you should not take any advice from me unless some of this stuff is resounding with your, making a touch point on your life. Just some ideas. You can say, well, I like Chris's idea about that. He might have a point, but I'm going to toss out all the other horseshit he said. But you make this decision for yourself. So with a market that is swinging wildly with tweets, a market that appears to be at a 10-year high in a growth period that appears to be long in the tooth. Recessions come along every, 8 years? And then you have maybe just a couple of years of recession. Well, this market has been nothing but up for 8 to 10 years. And what was it, 2009? We started all these QE programs. I got another video about that. So we're at the point where this cycle has to turn pretty soon. It should in a healthy market. In an unhealthy market, they just keep pumping it, keep running it up. They run it up to $30,000 or 30,000 on the Dow. I guarantee you that's with dollars that have been printed and fabricated out of thin air. And you better look at your dollar and compare that to gold and silver. And I think you're going to see the gold and silver have gone way up and the purchasing power of your dollar has gone down. And inflation is the most insidious thief of your money because you won't hear about it on the news. They don't want to acknowledge that inflation is going up because then cost of living increases and Social Security have to kick in, and they have to raise rates or they have to defend keeping rates low. If inflation is high, you know, the thing they've always done to keep inflation down is by raising interest rates. Well, if they raise interest rates, nobody can pay their debt anymore. And we're talking about the federal government, you know, going to 3.2%. The market crashed on that. Oops. They changed their program, started easing back. Whew. You know, we averted another crash just earlier this year by the Fed changing direction. They're not going to raise interest rates. They're going to keep them down low, which means more cheap money for everybody, which means that your inflation is just going to continue on, whether it's in the news or not. Your grocery bag's going to be filled for a whole lot more money, and everything you buy is going to cost more. So stocks are out. Real estate's at an all-time peak. Made my money, lost my money on that a couple times. Not going back into that now. Again, if you're young, you need a house, you've got kids, the suburbs are a fantastic place to raise kids. But you better watch what suburb you're buying into because a lot of them are, they've had bidding wars for these homes because of the low interest rate. You know, everybody can get in a bidding war. You know, it's like, well, what's another 10 grand? I'll bid 10 grand more. I'll bid 20 grand more because in the end, with these super low, artificial low interest rates, you know, a couple sits around the kitchen table and says, well, Susie, you know, that's only $20 more a month, but we could actually win this house from this other guy that's trying to buy it for $20,000 less. You know, let's say 520. Now let's beat his offer of 500 grand. Let's go 520. You know, this is how the real estate market has been bid up and bid up and bid up out of sight. And then there's the other factor too. Now I'm a renter. I choose to rent versus buy. It's a much better deal for me. Again, my age, 62. Need my mobility. That's of great value to me. Within the next 5-6 years, I'd like to slow down, maybe retire. I may be going to another city. I'm not going to be able to pay off a house in 6 or 7 years. If you're a young couple and you've got all your other debts paid, you don't have that student debt that you're just piling on a mortgage on top of. You're at a point where you can buy a home and it'll be a joy to have versus a huge burden and worry. Then by all means, take that down payment, get these low rates, take advantage of that, but don't get in a bidding war for a market that has already gone parabolic in value, because you'll end up underwater very soon, and that becomes a worry. You got to be smart about where you buy. There is nothing wrong with renting and letting someone else worry about unexpected things like the roof or the water heater or anything else that can go out. That's a perfectly wise financial decision, to rent and reduce risk instead of buying. And I know, and I'm talking about for people, young people, older people, I almost categorically say don't buy, but that's my experience here in Chicago. Even if I pay off a condo completely, my taxes and assessments monthly would be $2,000 a month just for a small cracker box like I have now. So there's no gain in paying off a place like this. Not when the monthly expenses are more than the mortgage. And this is the thing, I've done the math. The taxes and maintenance are higher than the mortgage payment. I can get a nice condo that only costs me like $1,200 a month in mortgage payment, but then I've got another $1,700, $1,800, $2,000, $2,400 in taxes and assessments every month. It's crazy. Why would I do that? Anyway, so then what are the other options? When we're talking about Tina, there is no other option. There is no option. Cryptos, really fun. I got $10 invested in cryptos. I opened up a Coinbase account. I'm crypto curious, you would call it. So this is the most speculative part of what you could invest in. Nobody knows what the cryptocurrency du jour is going to be. And I have absolutely no argument with anybody that says that blockchain is not going to be a part of our future technology, part of our financial world somehow. It still evades my consciousness how when many other cryptocurrencies could be created out of thin air using basically even the same code. I still don't understand how it has intrinsic value, even though it's so rare and all this kind of thing. And I feel like it could be legislated out of existence very, very easily. I don't see any of the privacy advantages that precious metals have. I just don't get it. And this is the popular thing. Every time you say I'm not into cryptos, everybody jumps on you and says, well, you just don't understand. I freaking understand. I'm a college educated person that writes financial software. I understand. I understand the blockchain. I understand how it works. I've downloaded the open source code. I've played with it. I know what it is. What those people that just want to say you don't understand about cryptos is that they think that they have discovered, because they've got some fancy words associated with physical things, like the word coin, like the word mining, these kind of things. I mean, these are psychological attempts to somehow equate a digital thing with a real thing. And if you think that's the way to get people on board, then I got to tell you something. You don't understand. I understand that it's digital, and I still see the value of the technology. I see the value of technology called email. Isn't that awesome? Isn't it great? But guess what? Anybody can generate an email, and there's no limit on it. Now I could say that an email with a certain logo, a certain signature line in it, that's rare. That's right. I can make a logo for my email that makes it perfectly unique, and I can issue 21 million of them, and nobody else can use those emails, and after that all those emails are gone. Except when all those emails are gone, somebody else just say, well, I'm just going to use this other email over here because it does the same thing, and actually I didn't need your logo. So until that's kind of worked out, I think cryptos are great. JP Morgan's creating one of their own, and they're going to try to, I think, maybe use that as an alternative to the SWIFT system. I think it's a great way to exchange or as a token of real money. I just don't think it's real money. And I've yet to be convinced. And I understand. And if you're trying to call it mining or coin or a replacement for gold, this tells me you don't understand. Anyway, video's gone long. I hope you understand that I'm waiting for Tina. And the Tina I'm waiting for is when everybody else understands that there is no alternative. And this day will come. This day will come when the market turns over, when people discover that their dollars have been robbed through inflation. People will be running for cover, and they will be running for cover to any kind of hard assets that actually have real value and are not represented by paper or a representation of paper on top of paper. They're not a hypothecated, government controlled or controlled at the whims of emotion and tweets and this kind of thing. This will come, and the smart people and the wealthy people will rush for cover, and they will rush for cover with low risk things that have intrinsic value that will help them get past the big crash. On the other side, the sun shines again. And after all of the assets that have been in a bubble come down to a reasonable value, which they will in any kind of pullback, that's the time when you take those things that you invested in now that were undervalued, like gold and silver, and you buy those assets, you buy those businesses, invest or start a business when the sun starts to shine again. And at that point, you have a lot more value. You didn't lose your 30, 40, 50% or more with paper assets. Your assets are intact. And in the case of gold and silver especially, I think one could make the case that you'll actually end up wealthy, that it will act as an investment. And I know a lot of people, just a hedge, just insurance. Okay, well, it's not like insurance because I pay insurance. It's not that I don't understand that it's just insurance. If you say it's just insurance, you don't understand insurance, or you never paid for it, because I never got a dime back from insurance. Whole life policies, one of the worst investments in the world. Yeah, you'll get some money back at the end, but you could have easily invested that money in a lot of other places and done better. But I'm talking about insurance. This is insurance that never goes to zero. There's some crummy old coin. Let me find it. Here we go. Here's a real common Morgan. What did I pay? I paid $17 for this Morgan. This will never go to zero. Okay? I wish I had brought my insurance bill to show you what I paid for my car insurance or my health insurance, which I never use. I don't go crash my car all the time. So, in fact, I haven't crashed my car in maybe 10, 12 or more years. I haven't been sick enough to go to a doctor in years. So don't tell me that this is insurance. My insurance, I pay it. It has value. It has transitory value, though. Covered me for that month. This is insurance, but it never goes to zero, and it's also an asset. And I also don't have to ask anybody to let me add it. So anyway, 30 minutes, my longest video ever. I've got another one coming up where I want to talk a little bit about the silver bars. I'll do a short one, but if you've actually stayed through this whole 30 minutes, boy, you deserve an award, because nobody else is watching my channel. I think I got like 60 subscribers, and maybe about 10 of them watch. Doesn't matter. Maybe somebody that it really matters to will watch what I'm saying here and consider, and let's use this word, Tina. There is no alternative. It is coming. There is no alternative will hit gold and silver, and I hope you're there. So this is Chris with Hotspot Metals, signing off.